Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
What is going on, everybody? In today's video, we are going to go over my favorite long-term dividend investing stock that I have personally have a ton of money into this one, and I'll share that here in a little bit and why I have it in this stock. Now, with that being said, this company is PTY. It's also known by PIMCO. It's a closed-end fund. It's mainly a retirement fund. Honestly, when you're looking at it, it is mainly it's an income fund. It's mainly driven to give you that monthly income because it is a monthly dividend paying stock here, and you guys can see this over here. It is a monthly dividend stock, which is, again, I'm huge on these, but let's go on ahead and compare this to SPY. So if we come over here and you have PTY, you have SPY up here, of course, you guys can see that the charts are almost identical, and that's kind of why I liked PEY. Now, don't get me wrong, it did not spike up past its highs like SPY did, but it's continuously growing. It's not having a huge sell-off, kind of like what we're having. It hasn't started to be a huge sell-off, but we're having nice big red candles here on the daily chart, which is never a good sign. And PTY is having red candles, but it's very, very slow moving, so that's okay. I kind of am honestly hoping that this thing is going to take a dip so I can buy even more. Yes, I'm buying even more of this stock here currently on every dip possible. Now, with that being said, let's go over here and get into why I buy this, and I'm going to show you the numbers on this one. So this one's going to be the dividend history. We go up here, PTY is trading at 17.87. That's what it closed yesterday at. It's 13 cents per month dividend. Now again, this stock is only almost, let's round it up to $18. This is a really, really good stock in order to be able to get in and just hold it forever, have the drip in. If you guys don't know what drip is, it's dividend reinvestment plan. We're reinvesting every dividend payment we get of 0.013 per share right back into this company in order to get more shares, and that's where you're going to end up getting that compound effect and making a lot of money. And I've done it too. So when it comes down to these, you guys want to make sure you guys understand what it's all holding. This is going to be a lot of corporate bonds, securitized bonds, my bad, and government bonds and things like that. It does have a little bit of real estate and municipal and stuff like that in it. You guys can go through here. Here's the top 10 holdings. You're always welcome to go through these. I don't really care about them that much when it comes down to the top 10 holdings. I just kind of want to know what we're in, and as long as it's going to continue to make me money, that's what I care about and what the chart is saying. Now, yes, the holdings are going to tell you a little bit about that, but again, we're going to go over here. So when I want to go over here to the max and really understand why I like this one. So it was introduced here at about $14.80, $14.90. It stays flat, so you're not going to get a whole lot of growth on this one here at the beginning. It crashes in 08 and 09 like everything in the market ever did, and then it ramps back up to new highs. And again, you're going to have that kind of a sell-off in 2015 that we had, and then again back in 2020. Those are just market crashes that have happened. Those are the times where you need to be buying, and that's where you're going to make a ton of money if you're allowed to. Not saying that I'm not still investing in this, because we're here at $18, $17.87, and I'm still buying this stock. And I really kind of just want to show you why I'm still buying this stock no matter what. And I was buying a ton of this stock during the pandemic because, again, JP Morgan owns a lot of this, and if you go back into the insider trading, you can see that bigger companies are owning this. So I'm going to compare this as a portfolio visualizer. If you just Google that, it'll pop right up, and you can use any stock in this. 100% to each one of these: PEY, SPY, and PTY. I'm going to use $10,000 to start out with. Year to year, you guys can change all these. I do have dividends reinvested here. You want to make sure this is checked to yes. We're going to go on ahead, click Analyze Portfolio, and you're going to see here it'll break down everything. You're going to get just a ton of information here. There are going to be drawbacks, blah, 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 blah. You guys can go through that in your own time if you want to. But I want to talk about the portfolio growth and the performance, and I think that's a huge thing here. So PEY, which is a monthly dividend stock, which you guys know kind of follows the market as well as in big in financials that we talked about. If you didn't watch that video, make sure you go and watch that video. That is one that I am personally invested in. I'm also invested in the S&P 500, not near as much as what I used to be because of PTY. I actually took a lot of money during the pandemic. You guys know that I sold a lot of it. I never put it back in. I ended up buying things like PTY because JP Morgan Chase and all of them were buying this, and I started doing more research. So do your own research. So PEY obviously is going to be the slowest growth here. It's still going to be monthly dividend. SPY is going to make more money obviously here. And then we have PTY, which is in the yellow, which is absolutely killing SPY when it comes down to overall growth of this portfolio. You guys can go down here into annual returns. The biggest year here, 61.62%. The worst year looks like it's right here, negative 13.75%. SPY was up 5.14%, but it doesn't even matter because if you look up here, it's still staying with it. They're all still so close together. It's when you start getting that exponential growth and those dividends is when PTY really takes off. And again, you guys can come down in here. Look at this, the portfolio income. Again, this is for my retirement account. This is a retirement fund for me. I don't plan on touching this. I mean, I am technically, I guess, retired, but I'm still holding these stocks and keep continuing them to grow because I got income coming in from multiple sources, so I don't need to touch any of this. So I'm just continuing to let it grow. Obviously, I have more money than the $10,000 into these, but you're going to get a ton of income from these if you're looking for something when you're going to retire that's going to provide a monthly income for you and make a lot. If you put about $1 million in here, which is roughly what I have into PTY, you're going to make just over $7,000 a month on that. So you guys can do the math there. Again, it's 0.13 cents per dividend. Yes, I'm going to have to pay taxes on it, but right now I'm not collecting any of that money. I'm actually just letting it roll back into the stock. So with that being said here, you guys can do all of this. Again, portfolio visualizer, it's something great. I actually really like this tool. I use it a lot. But if this helped you guys, please hit the thumbs up button, and I will see you guys in the next video.